All right, Steve, we'll send it over to you for more money talk.
Well, yeah, Jeanette, I'm going to see your fears when it comes to inflation. I'm going to raise your 401 fears as well. Financial fears certainly hitting the 401ks hard, and it's leaving a lot of people looking at your 401k with pure panic, and rightly so. So what should we do? Well, fortunately, we have experts that work amongst us. Motley Fool senior analyst Jason Mosher joins us with more help for us. And man, we could use the help, Jason. We talk all the time, and it wasn't that long ago that we were talking, and you were just like, stay the course, just relax. Just be fine with all this situation. Well, it's been a few months, and it's not getting any better out there. From a financial standpoint, what advice do you have?
Well, it's not getting any better right now, but I promise you it will get better. We just don't know when. I think there are some things, though, that folks need to focus on here in regard to 401ks, your retirement. First and foremost, you really need to know your goals and where you are in relation to your retirement, right? This dictates how you should be allocated in your portfolio. And you have to remember, investing is a lifelong endeavor. You should be invested even during retirement, right? You're going to be invested ultimately for the rest of your life. So knowing where you are, right? If you're outside of 10 years of retirement, you're still in grow your wealth mode and you can take a little bit more risk. But if you're within 10 years or if you're in retirement, you need to focus more on protecting your wealth. We've talked about that before. That will help you sleep at night knowing that you're allocated appropriately.
So without getting into details of anybody's portfolio, because I know it's impossible to do that, but if you're in that window, maybe you're within 10 years of retirement and you want to play it a little safer now, or you're in fear that the money you just lost, maybe you're down 20%, that now your financial savings, your retirement plan is down 20%. Where would you reallocate? What would you do? Are you talking about safer investments like bonds at this point, or is there something there, or would you go all in on stocks because they're down?
Well, I certainly wouldn't recommend going all in on anything at any point, right? I think bonds always hold an appropriate place in someone's portfolio, particularly as they get closer to retirement. But definitely during those retirement years, we like to focus on those blue chip ideas, those dividend paying stocks, the dividend aristocrats, those companies that grow their dividends annually every year for long periods of time. The stocks themselves don't appreciate all that much, right? They're going to be slower growers on the capital appreciation side. But you get that reliable dividend income stream, which is really helpful as you get closer to retirement and when you're in retirement.
So if you're 20s, 30s, or 40s right now, and unfortunately you just see that balance is dropping, it's not pleasant to look at, but maybe you just played it simple and you just put your money into a balance fund, maybe something that's like a 2055 retirement fund or something like that in your 401k. Do you just leave it at this point?
Well, I think you definitely leave it, right? You have to stay invested. Don't cut and run and try to wait it out. I think most folks don't realize half of the best days of the S&P 500 occur actually during bear markets, during market conditions like we're witnessing now. So trying to time that is virtually impossible to do. So rather than cut and run, stay in. You want to stay invested. And one thing folks might want to consider, particularly if time is on your side, actually, and this runs a little bit contrary to, I think, what a lot of people think these days, actually consider upping your contribution to your retirement plan, right? If you can afford it and you have time on your side, contribute a little bit more because, hey, we all like sales, right? Particularly now where inflation's really eating away at our wallet. But right now we're getting these proven assets at a sale price. And so if you can take that longer term outlook, then really considering upping your contribution could make a lot of sense, particularly if you need to play a little bit of catch up, right? If you've been a little bit behind in your investing strategy in your retirement preparation, these could be good times to consider raising those contributions because they will give you a little bit more bang for your buck, so to speak.
It's tough for the mind to comprehend that. Sometimes you go to a store, you see 25% off and you buy everything on the rack, and then you see the market at 25% discount and you just think, oh my gosh, I've lost so much, as opposed to looking at it like I can buy at a bargain right now. Real quick before I let you go, the flip side of things. Times are tough. We mentioned inflation coming in. People are pinching pennies at this point. You don't want to touch that money that's in your investment account, but if you need money right now, what do you do?
Well, we always recommend folks to not take on more debt during times like these, right? Taking on that high interest credit card debt can be a really tough thing to do. So if you do need money, if you have a mortgage, perhaps you could look at some type of a lending situation there with your mortgage debt. You at least get the tax benefits there. But sometimes it really just requires us making difficult choices, right? Sometimes you have to put things off. You have to forego things that we might normally be able to indulge in better times. So times times like these where you got to batten down the hatches and make some difficult choices, no question.
Yeah, but try to leave that 401k alone, especially if you could get penalties for early withdrawal as well. Got to keep that in mind with your age. Jason, thanks so much for joining us. I know it's a tough topic, but stay the course if at all you can. Motley Fool senior analyst Jason Mosher, there's his information. Trying to help us out, guys, once again.